Hey, welcome back to the channel. Just thought I'd get a little update going here. It's been a little while since I jumped on to make a video, but I just want to get into a couple quick things with Bitcoin and some other things, including MicroStrategy. Um, Seems like we've hit the top at 108. A few weeks ago, we've been correcting down to 93, 92. Um, there was some buying pressure in this area. So as long as we continue to rally a little bit, we can head back up to the hundreds. I'm thinking 120, 125 by not June, maybe a little earlier, in May or April. I'm thinking that selling pressure will continue probably for earlier investors, and then you're gonna have newer investors coming in at in the 90s. Um, this doesn't mean that we can't go lower. I mean, I think we could head down to the 80s potentially, which would be good. Most investors like panic when the prices go down, but honestly, you should be embracing every dip you can, because this technology is just unmatched. Um, I mean, plus fiat monies are really starting to not to tank, but I mean, people are starting to lose faith just based on inflation and prices going up and government control of currencies. And this is just kind of like the reason why Bitcoin was made. Because if you look at what's going on, the prices of everything, inflation, rent prices, it's crazy. You look at like real estate, for example, and people are like, oh my god, like the prices are appreciating like so much, like wow. And it's like, yeah, the real estate is appreciating, but also it's because your dollar is depreciating even faster. So like Michael Saylor, for example, was talking about how his condo or his house in Miami, or in Florida, it was at the back in the early 1900s, it was like 40 grand or something, and now it's worth like 20 or 30 million. And he's basically saying like, my condo or my property to the US dollar has lost 99% of its value to the property's value. So it's like inflation's like one of those things. So my key to this is you definitely want to have some funds in the bank to to live, maybe like a nice 6 month emergency fund that has all your expenses covered. Then on top of that, if you do your regular investing and contributing, you can also just buy the dip on certain coins every now and again. I mean, I've been buying a lot of different things. I've been buying Compound, Aave, BitTensor, Stacks, Alex Lab. There's so many little projects out there that, like, they have a lot of potential. Some of the meme stuff is interesting too, but we try to stay away from the meme coins because that can be a very dangerous game to play. You could be catching a falling knife when it's selling, when people are selling. You could be buying at the top and you don't know it. So I stay away from all memes and anything that it has no utility. It's really hard to trade something that has no utility whatsoever. Okay, now let's shift gears into the stock market. S&P 500 topped out at about, I think it was like 608. It's had some selling pressure ever since. I have a feeling we are going to continue to have some selling pressure, especially, I mean, this is the end of the year, so most of those investors that were trying to take a tax loss were trying to, like, sell to take that year-end tax loss. I believe most of that has been done. So we'll see what's in store for the markets on Thursday. It's been a pretty quiet week. I mean, there isn't many earnings this week, nor are there many events going on. Yeah, so I use Stock Twits to get these updates. I get the what's called the Weekend Rip edition, which is like the weekend article they have, where they have the events going on for the week. They have which companies are reporting earnings for the week. So it's a very useful tool to level up your trading to the next step. So now another interesting sector is quantum computing and AI. Has seen a significant increase in prices as far as C3.ai, SoundHound, BBAI, Upstart. There's a lot of companies that are taking advantage of the AI boom. So kudos to them for being able to ride the hype, because for a while most AI companies were beat down and shorted to the ground. I mean, not completely to the ground, but C3 AI was like $23 a share. BBAI was like $1.75. SoundHound was like $5 a share, $6 a share, and then all of a sudden, bada boom, and investors started to like the AI stuff again. So we'll see what happens. So MicroStrategy purchased more Bitcoin once again the other day. Unfortunately, though, it is not something that investors are thrilled with. The company has been on a downtrend since it's hit its peak at 550, and now it's like 300, 305. So I'm not saying that we've hit the bottom, but I mean the it could get lower. This MicroStrategy stock is so volatile, and one day it could go down 15 to 20%. Yeah, granted it could also go up 15 or 20% one day, but more often than not, lately it's been going down. So it's one of those things, like pick your battles. Like you think it's gonna go down, play some puts with a nice stop loss, you know? Because you don't want to get stuck when the market rallies and then you're just losing everything on that one position. Stop. Risk mitigation has to be the most important thing to learn as a trader, because if you don't know how to risk mitigate, you will literally lose your entire career on one trade if you don't know what the hell you're doing. So, and then sometimes it's like one of those situations where you might buy the dip, or you know, whether it's a call option or whether it's shares is not as risky, because you know, like it like could bounce back and all that. But like when you're doing call options, like forget it. Like you gotta know what the hell you're doing. You gotta understand the theta, you gotta understand the delta, you gotta understand all of the contributing factors that go into a call option, so you can know what the hell you're doing. Because if you don't understand theta, and you don't understand delta, and you don't understand rho or any of the Greeks that go with options trading, you will lose everything, and you will lose on and then some, because you will try to go back and gain your money again, and then it's a gambler's issue where you're like, oh, I'm gonna keep putting money in, and you know, it's a gambler's thing. I'm gonna spend big and win big. It doesn't happen that way. You're better off getting a bunch of small wins and stacking it up and building, as opposed to one huge call option that's gonna make you a millionaire or whatever. You're gonna make 50 grand. Just as easily as you can make 50 grand, you can lose everything with a call option. So understand the risks that you're taking. My recommendation for call options is to do cheap ones. Like the company Plug has really good cheap ones that are the expiration is far out, and you can buy like a 250 or $3 call for like 60 or $70, that is like 5 or 6 months out. So that 5 or 6 months is a big margin of error that you can work with. As far as if you're buying a call option that's really short expiration, you're first of all, theta is eating up your contract by the day, number one. And then number two, your margin for error is very small. It's like this. But when you have a long call option that is like 6 months out, your margin for error is like this. So if you're wrong, it's okay. It's gonna fix itself out. And especially the theta is so high on that call option that's 6 months out. There's gonna be excuse me, the theta is gonna be low. Excuse me. Theta is going to be so low that the contract is going to lose very, very little intrinsic value based on time, because it's so far out. 6 months out is such a long time. I mean, it's not like the longest, because there's call options that are two years out, but I mean, the sweet spot is like 4 to 6 months. If you can do that, you're doing pretty good. Now, for most companies, this might not be possible because some call options are very expensive. The premiums are quite high. But if you can, other suggestion for options is when you see the market dip like pretty heavily, especially for strong companies like Broadcom, Nvidia, um, Apple. Apple's kind of a hard one. Microsoft, Amazon, like Walmart, I think too. I've had luck, like Walmart calls can be pretty interesting. I've had luck with Nvidia calls. I think I just mentioned Nvidia. IWM and index calls and like SPY, very risky unless you know what the hell you're doing. Some people be doing the 0 days till expiration hand grenades, which I just don't understand. But hey, more power to those traders that know what they're doing with those risky instruments. So yeah, thanks for tuning in this video. I'll definitely be trying to upload some more. I'm trying to get some more content. I'm trying to get some more viewers on this platform. I want to help people. People need help, and they're struggling out there. So let's see if we can bring some positivity and some good energy and some positive financial information. If there's any particular videos you guys had in mind or had any questions, just feel free to drop it in the comments here and hit me with a like and a subscribe, and I'll definitely catch you all in the next video. Thank you so much.